David, thank you very much for joining us today. Denison Mines' flagship asset is the Wheeler River mining project, and that's comprised of both Phoenix and Griffin. You recently came out with a feasibility study on the Phoenix project, and I want to spend some time on this. Maybe you can just take us through the highlights of that feasibility study.
Yeah, Jimmy, it was a real important milestone for our company. The updated technical report just came out for Wheeler River, has two parts to it. A feasibility study for Phoenix as an ISR uranium mine, and an update to a PFS for the Griffin deposit as an underground mine. And you're right, highlight continues to be for our company the results on Phoenix. Really an excellent outcome after several years of technical de-risking, proving up what was really a game-changing decision from us in 2018 to declare Phoenix as a future ISR mine. And now we've spent the last 4 or 5 years de-risking, building our data, and proving up that the concept of ISR mining is no longer a theoretical application to the Athabasca Basin, but is something that actually does work. We've now proved it in the field, and we've layered that into the feasibility study. Now, our feasibility study is done by an external qualified party under our Canadian securities regulations. This international engineering firm, Wood, that was authoring this, working together with us to bring it to the highest level of standard in our regulatory framework. We confirmed that the project has tremendous economic potential, and we confirmed all the key technical details were similar. Now, a lot of things changed from 2018 to now based on the work we've done, but the mining method continues to be robust. The technical side's working better, or at least as well as we thought it would. And even with all of the changes in costing and all of the design changes, the project remains positioned to be one of the lowest cost uranium mines in the world, competing with the likes of Kazatomprom and the Kazakh ISR operations, and even and better than the large scale conventional mining operations that already exist in the Athabasca Basin. So an enormous accomplishment for our team, and really positioning our company now to move forward and become one of the next new producers in Canada.
And when in production, the Phoenix will be the first ISR uranium mine in Canada.
That's true. We are leading the industry when it comes to ISR mining in Canada. ISR mining is a common way to extract uranium globally, but it's not being used in Canada. And we have been pioneering that, and we've developed an in-house team that has really created an enormous competitive advantage for our company. And maybe just a bit of a sidebar on that is that we're actually doing work on a joint venture with Urano called the Midwest Project, where we have a minority position, but we're working together with Urano in a way where they've brought us on to evaluate Midwest as an ISR mine. And that just recognizes that our team has expertise that does not exist elsewhere in the industry when it comes to testing and understanding how ISR mining will work in the high-grade uranium deposits of the Athabasca Basin.
And you bring up an interesting point there. Does Urano currently have any ISR operations?
Globally, yes. Urano has interests in Kazakhstan that are ISR. And of course, Urano has all the capabilities in the world. This is one of our industry leaders, but it's unique what we're doing, and so they recognize that and realize that it's not easily replicated to acquire the knowledge and the experience that we have over the last few years in the field, in the lab, doing the technical studies to actually figure out how ISR mining will work successfully in the Athabasca Basin.
And now that you've completed the feasibility study on Phoenix, what are the next steps?
Yeah, I mean, does it get a little bit boring? Maybe it gets a little bit boring. We've already transitioned into engineering design, so front-end engineering design, and into detailed design. That's next, and really that's executing on the feasibility study at a level that we can turn into construction. So that work will continue for the next few years in parallel to our permitting efforts, such that when we have an approved environmental impact statement, and we're sufficiently licensed that we can make a construction decision and execute on those engineering plans. So that's, call it a 2-year timeline here from where we're at to be through permitting and all that detailed design, with a view to start construction in 2025 and a view to have first production by 2027, 2028.
That's a great overview of what's happening at Phoenix. Now let's move our attention toward Griffin. You came out with an updated pre-feas on Griffin. Take us through that.
Yeah, a little less exciting. What we've done at Griffin, we really focused there on updating for costs. We made minimal design changes, a few little tweaks to some of our scheduling, but no notable changes. It was really focused on cost updating. Now, I think that was really informative because costs went up. And in our industry, many of the companies that are operating do not have current technical reports. And it's sort of a guessing game what the real cost of production will be, or what the real cost of new development assets will be. And so with Griffin, while we were able to preserve the project as being highly economic and positioned in the bottom quartile of the cost curve still, our costs are up. And I think people can look at those costs and say, this is still one of the best mining projects in the world. But imagine those kind of cost increases on maybe of a higher scale or larger scale applied to a project that was already further up the cost curve. And then start to think about all of the analysis that everybody's done in our market year after year after year around cost curve and which is the incremental project necessary to balance this demand-supply equation, and realize that all those assumptions that people have said of price having to be in the $75 range or whatever they might have prognosticated, it's probably higher today. And there aren't a number of public studies out there recently that reflect current costs. And so Griffin was a very good outcome still in that our NPV was within 5% of where we were in 2018. When you consider the kind of cost increases that we reflect in there, that's still a great outcome because we juggled some of our scheduling differently. But apply those kind of costs or more to that marginal project that's already in the third quartile of the cost curve, and you'll see that incremental project is much more expensive in reality today than what a lot of people are looking at when they look at a report or a study that was done 5 years ago or 8 years ago.
Very good point. And inflation is impacting mining operations throughout the world. And now that you've completed this feasibility study on Phoenix and the updated pre-feas on Griffin, you have a good understanding of how costs are in the basin. Maybe you can just speak to that, how inflation is impacting operations in the basin.
Yeah, look, we saw inflation like everyone would expect across the board, materials, labor. We were very lucky in that our projects have very low cost profiles. So when you start with a lower base and you add to it that inflation, you're way better off than when you start with a very high base. The nature of Phoenix really protected it from inflation because it has, the ISR mining just has much lower capital costs up front. Labor costs are much reduced because you're using pumps and valves and things like that instead of people operating equipment. And so we were really insulated from that. But I can tell you that there's inflation across everything. And again, the point is that projects that are out there that have not updated their costs, if they just proceed without updating costs, there will be a rude awakening perhaps for some of those projects when they try to deliver on those estimates. And certainly as people update their studies, we will see costs go up, and they should see it across reagents, materials, labor in the Athabasca Basin, but you'll see it everywhere.
David, that's a good overview of what's happening at Phoenix and Griffin. Now I want to move on. One of the interesting aspects of Denison Mines that I always find enjoyable is the fact that you purchased 2.5 million pounds of uranium in 2021, just under $30 a pound. It's now trading at approximately $60 a pound in the spot. What are your intentions with this uranium?
Yeah, I mean, we did that as a long-term strategy. We weren't intending to trade. It was really about providing enormous stability to our balance sheet. With Phoenix, moving forward, we didn't want to be susceptible to the ups and downs of the capital market, knowing how much we'd have to invest in the project and the commitment that it would be to move Phoenix through feasibility study and into detailed design and engineering. So the physical uranium was really about adding balance sheet strength, but having exposure to our commodity rather than just having cash. Now, it's obviously worked out well for us, and we played out all the scenarios of how it might not work out well to buy physical uranium. But it was a sensible choice, and it has gone one of the ways we thought it could go with the value increasing. What's tricky with it, Jimmy, is that we have options that are not normal for developers. Most developers that don't have a producing asset have a very clear path of what they need to do, and they have to go raise money to build their mine. We have a near financial asset in the uranium that we can use potentially multiple different ways. And the right use of that material changes based on the conditions in the market, potentially daily. So there are certain circumstances where the right thing to do would be to monetize some of the uranium instead of raising equity. There are certain circumstances where we're less sensitive to that and equity prices are favorable. And maybe we would hold the uranium, as we've been doing, to leverage it for future project financing or initiatives related to that. It could be a collateral for a debt that changes the pricing on the debt. It could be used as a collateral or an assurance in an offtake agreement. It could be used as part of a supply contract or any number of other things that changes conventional equations for developers. So we're in that process now of assessing, now that the feasibility study for Phoenix is done, how do we move forward with project finance and how do we best use the physical uranium? So we don't have an answer to that per se right now in terms of what we're going to do with it, but we are being cautious and we do see it as an important asset on our balance sheet that de-risks our company generally. I mean, investors should be confident to know that if the market is down, we're not in a position where we must go and raise significant amounts of equity to continue the project. We have the physical uranium. And that uranium is obviously increased in value and continues to increase in value, where now we would have in the range of half of our upfront CapEx for Phoenix already on the balance sheet. This is a characteristic you will never see out of developers. Pre-permitting, pre-construction decision, or pre-project finance, we already have essentially half of our upfront CapEx on the balance sheet. So I do think that makes us unique in that investors can look at our story and realize that the potential equity dilution of our company is simply lower than many of our peers.
David, as we head into year-end, what further catalysts can we expect from Denison Mines?
Well, Jimmy, we're working on exploration. I love our exploration strategy. We are aggressively seeking ISR amenable deposits, and I think we're still an outlier in that. Number of the players in the region continue to be looking for basement-hosted deposits. We want things that are in sandstone, and actually we think there's great opportunity because that was not generally a target for many years on many properties. So we do have active exploration. It could be a catalyst any day sort of thing. We are also working on our agreements with Indigenous groups. So we've taken an approach of having foundational agreements that we've already signed with multiple Indigenous groups that cover all of our properties rather than just Wheeler River and all of our activities pre-construction. But we are working on agreements for advancing Wheeler River to construction and into production. So those will be important de-risking catalysts for us, any announcements of impact benefit type agreements. And we are working on Midwest with Orano, and there is the potential towards the end of the year or into next year to update the internal concept study that we completed for Orano at the beginning of 23 and from work at the end of 22 on ISR mining at Midwest. There is the potential to publish a PEA for ISR mining at Midwest, and that's something we're very excited about because we do think it could be very robust.
Davey, you've been coming to the World Nuclear Symposium for many years now. Have you noticed any noticeable differences?
Yeah, Jimmy, it's a unique event. Not every year is as topical to sort of the uranium supply side of things, but this year it was one of the years where they were updating their supply-demand model, so they do that periodically. So I sat in that session yesterday and I took a few notes, so I'm happy to share them with you. Look, there was a notable change in the way they were presenting the supply-demand picture. Demand has certainly firmed up, and they're now projecting more growth than they were in the last report. And the supply side of things, I think the committees that are involved in this report were really flagging that there are some concerns. So I'll go to my phone here. This is right from the floor, okay? Jimmy, new projects need to be accelerated. We're running out of time. These are quotes, paraphrasing from remarks made by the panel. We need more proactive collaboration between suppliers and customers. One of the contributors commented, we're on a path where not everybody will get the supply they need. And we've sort of been saying that for some time, realizing the time it takes to advance projects. Denison, unique position in that we've advanced projects through difficult years because of our economics. Those marginal projects at the top of the cost curve, highest cost stuff, how could they invest when uranium price is $29? So those projects are behind. The other one that I found was interesting from one of the utility contributors. Things are tightening up. We have to start paying attention to form, location, and mobility. The report could be a bit of a wake-up call. So, look, I think they're presenting a picture that shows demand is very positive and that supply of the uranium is actually quite a legitimate concern. And sometimes this industry forgets that nuclear power comes from uranium. Of course, we all know that, but all the work we're doing in this industry, building power plants and decarbonizing, it can't happen if we don't have the uranium to go into the reactors. And I think that was really a powerful theme that came from that update to the report. And it was a very well-attended session, so I'm hopeful that that message starts to percolate throughout the rest of the conference.
David, great insights as always. Thank you very much for providing an update on both Phoenix and Griffin.
Jimmy, my pleasure, and thanks so much for being here in the trenches on the floor in action. It's great for you to be here.
Thank you.